Whether if you're doing analysis to figure out if you should enter a trade, or if you're doing analysis to figure out if you should stay in a trade, multiple time frame analysis is key to finding success in the markets. In multiple time frame analysis part 1, we talked about all the elements of breaking down the charts in order to figure out if we're going to execute on a trade. Now, going farther than that, we need to also understand how we maintain the trade while we are actually in that trade. Let's bring together the full picture of the whole trade life cycle as I show you guys how to effectively do multiple time frame analysis. You ready? Let's go. All right, guys, so the pair we're going to be looking at today is the Great British Pound versus the Australian dollar. Now, similar to what we did in part 1, we're going to now break this down starting with the daily time frame. And again, we're going to go through multiple time frames and analyze where we are in the charts and if we have any opportunities to execute any trades. Now, what I like to do if I'm performing multiple time frame analysis is start at the daily. And then I want to figure out what is the trend and where are areas of support and resistance. So first and foremost, we see that we have been on an uptrend, okay? So now we can look at this from a long-term perspective in terms of an uptrend from here to here, or if you want to look at more recently, then we can have from here to here, okay? Both of them are still valid uptrends. You get multiple touches for both, okay? For now, let's do the long-term perspective in terms of where price is currently going, okay? Now, the next thing I want to do is recognize areas of support and resistance. So I have resistance here coming all the way across. And just to give you the full picture of things, and again, this is how these areas come to be significant in the future. If you drag this area all the way across and look at the past on how this area was effective, let's pull this area. So now we see this area was effective in being an area of resistance right over here at this point in the past. And if we pull it a little further, we see that it also at some point served as an area of support for price right over here. Okay, so again, areas of support and resistance, they're going to come back around from the past all the way to the future to be of significance. Now, for purposes of what we're looking at for what's most recent, this is a solid area of resistance over here. Now, we also have an area of support right over here, and we can drag that across. We'll see on lower time frames if that becomes significant. And then you have your ultimate support down here in terms of where price has been recently. Okay, so that's what I see for the daily time frame. You can argue and say there's also an area of resistance over here. That's fine, we can draw that as well. But that's what I'm seeing in the daily time frame. In addition to all of this, I also want to know what I'm seeing first of all over here. In addition to the area of resistance, we get a double top that has formed. Okay, so this is a type of reversal pattern. And we want to see as we go down and zoom down into this area, let's see if price is giving us any indication that it may be getting ready to reverse. So let's go down to the 4 hour. So now we're at the 4 hour, and as we take a closer look at things, I want to see if I can recognize any other areas, major areas of support and resistance that may be significant. So there's no major areas at the moment, just this area of previous support that I'll just draw over here. But other than that, there's no other areas aside from what I saw on the daily time frame that I'm gonna see of significance in the 4 hour. I need a bit more detail. So now I'm gonna analyze the 1 hour. So now on the 1 hour, again, I'm gonna do my analysis. So we already established on the daily, we are on this uptrend. So this trend line came from when we analyzed the daily time frame, this trend line over here. Now, as we said before, other time frames can have their own trend. If we look at the 1 hour has been on a nice uptrend as of recent. So there's no major reason just yet, just from my analysis on the 1 hour, that I can see a potential reversal happening, other than just knowing on the daily time frame, going back to the daily, I'm approaching a major area of resistance that I should be cautioned about. Now, going back to the 1 hour. Now, the logic is if you're on an uptrend, just continue to assume that you're going to keep on trending up until you get some kind of sign. So you get this impulsive move, you get a retest, and then you get a continuation. And then you get another retest over here, and then you get a continuation upwards. A retest over here, and a continuation upwards. Now, the next thing we should probably expect is another possible retest. Okay? So We have a bias on the higher time frame, on the daily time frame, that we may get a reversal from this area, because once we get to this area from the past, we realize that this is an area of resistance, and price tends to drop when it hits this area. And now also on the 1 hour, for different reasons, we are expecting a drop, not necessarily just because this is an area of resistance on a higher time frame, but on the actual 1 hour time frame, we would be getting a retest if this uptrend were to continue. So even though the reasons are different in different time frames, the direction is still the same, that I'm expecting price to go down for the next couple of moves. Okay, this is how you start to form your bias. Okay, so now let's go to the 30-minute. So now on the 30-minute, I want to watch and see what happens to price. Okay, I'm going to remove some of this stuff so we can see a bit clearer, but I want to see what's going on with price. Let's remove all of this so it can be clear, and let's see what happens to price as we press play. So as we press play on the 30-minute now, which is now the time frame I'm going to actually watch to execute my trade, as we press play, we see that price has given us a bearish candlestick formation. So right here, we get an engulfing candlestick. Okay, notice how the red candle engulfed the green candle. We get an engulfing candlestick, and that is a signal for a reversal pattern. And not only do we get a move to the downside, we also get a retest back upwards, and then we can take a sell from that point on. Okay, so in terms of where we would take our sell, where we're able to take a sell, we are able to take our sell right over here. That's how you break things down from a daily all the way down to a 30-minute time frame. Now, there are other ways you can enter this trade. You can also look at this area of support over here on the 30-minute, right? So price formed the support over here, and you can say, you know what, if this support breaks, then I feel more comfortable taking my sell. You can do that as well. But neither are wrong. It just depends on how you trade. Let's continue to play to see what happens to price. All right, so now this is interesting. So now price gets to this area, just past this mini area of support on the 30-minute, but all of a sudden price reverses now. Price reverses, and as it's reversing, I have a decision to make. So if I did not close this trade out, depending on what my goal was, let's see from where we entered, how many pips we would have caught from here to here. Most people probably would have exited that trade after 100 pips. But let's just say you wanted to continue to follow this move and see what was going to happen. Because from a daily perspective, I know I'm at a major area of resistance. And from what I've seen before, this is not enough to be the typical drop that I usually see when price hits that area of resistance. Now, let me explain. We're going to highlight this area over here. And this little move that happened, let's look at how it looks like on the daily. So if we go to the daily and we analyze this move, we see that on the daily, technically, if price was going to reverse, this move has not even started yet. This was just a small wick. And compared to what it did before, when it was at this area, coming all the way down to this area of support, or what it did previously, coming all the way down to this area of support, that doesn't seem like much of the full move that I'd be looking for if I'm really anticipating a reversal. So those are one of the things you want to keep in mind, even while you're in the trade. While you're in the trade, you still should be doing multiple time frame analysis. That's how you really catch the entirety of a move. Now, I know some of you are scalpers and just care about being in and out. But even as a scalper, there's more to take from this move if you understand things not only from just the 30-minute on where you took the initial trade, but also all the way up to the daily on the higher time frame perspective. On the higher time frame perspective, this move hasn't even really happened. So that means there are more opportunities to enter until the actual big move actually happens. So let's see what's actually going on here. So now let's go back to the 1 hour, because on the 30-minute, there's a lot going on. It's a little jumbled, may be a little confusing for me to understand. Let's go on the 1 hour to see if we can get a better idea. So on the 1 hour over here, let me move this over. On the 1 hour, what I am seeing is a new area of resistance has formed within that daily resistance. Okay, now let's understand that. We know this is a daily resistance over here, but based on recent price action, a new area of resistance has now formed. And because I have a new area of resistance within a bigger area of resistance, this is more confluence that my move might be heading down even further. So now I'm going to look for even more entries to enter this trade. Going back down to the 30-minute, If price continues to hold, I'm looking at entering this trade. So now, since my bias is sells, I want to look at the next area of support where I say if price breaks this area, then I'm good for taking another sell. This was an area of support that price formed. Let's see what happens as we play this along. So you take your trade. You definitely had to be patient with this trade, but look at what happens from where you took your trade. So we took our trade once it broke this area of support over here. So we took our trade perhaps on this candle. So price comes down and definitely gives us enough for a scalper. But if you are a swing trader, maybe you hold this a little more. And as price comes back to this area, price gives you a retest back to this area, but does not invalidate the trade, right? So you got a break, you entered on the break, but all this is a retest, and price continues to go to the downside. So from this area all the way to where price went, you could have collected your 50 pips before it came back to this area of resistance. Now, again, let's break this down even further. We are still at not only the major area of resistance for the daily. Again, if I highlight this area over here, if we go to the daily, you see nothing much still has happened on the daily. If we go to the daily time frame, we see that again right here, that area was right over here at the wick of this daily candle. Nothing much has still happened. Okay, so we still have more moves to make because we see that based on analysis on the daily time frame, there's still more moves on the lower time frame before we get a bigger move. And what else happened? Price came back to the area of resistance, that 1 hour resistance that we established before. Price came right back to that area. So you get yourself another opportunity for a sell, right? So you take a sell again from this area, and then let's continue to see how price goes. Perfect. So you take a sell as price came back to that area. Now, depending on your stop loss, let's go to the 30-minute from where we would have executed this trade. So price came back around to this area. Now, you have to make the determination on whether it's plausible to think that your stop loss would have been here or not. Now, this is the difference between having a structurally placed stop loss versus just a numbers-based stop loss. When you just say my stop loss is just going to be 20 pips no matter what, or 30 pips no matter what, the problem is you completely ignore structure. And really, when you're placing your stop loss, it should be based on structure. So what I'm looking for, where I'm looking to place my stop loss, is the most previous high. So based on the 30-minute, this was probably the most recent high that I could see that is plausible enough for me to place my stop loss. So that being said, even though I went to a little bit of drawdown, it's completely fine because it would not have hit my stop loss, and then I get a bigger move to the downside. Again, some people may have been taken out, but if you're taken out, then maybe you should analyze how you're placing your stop loss, and you should be looking at structure when you're placing your stop loss. So from the area we entered the trade all the way to where price actually came down, we get another 100 pips. And again, we are still within the daily resistance. So still, this move hasn't really taken off yet. Now I'll change the color of the daily resistance just so there's no confusion. So let's change this to green. Okay, so the green is the daily resistance, the orange are lower time frame resistances. All right, so let's continue on with this move. So now as I continue on with this move, let's keep in mind that 1 hour resistance, right? If we go back to the 1 hour, going back to the 1 hour now, if I extend this across, then I see that price just came back to that area of resistance. Remember, each time price comes back to that area of resistance that it's respecting on the 1 hour and the overall resistance in the green here that it's respecting on the daily, then my analysis still is valid. It's just giving me more opportunities to execute my trades. So when I go down to the 30-minute and I get ready to execute, so now as price drops and gives me a retest back to that zone, this could be another potential entry for this trade. So if I catch another drop from this area to this area now, another 100 pips. And you can continue to do this and continue to milk this trade all the way until it has completely finished on a higher time frame. But that's what you want to do, and you want to milk this trade as much as possible. Okay, so sometimes we get into a trade, we get that trade, win or lose, and we leave it. And there's so much, and we don't understand that there's so much power in just following up with your analysis, not only pre-trade, but also while the trade is going on. If you continue to perform multiple time frame analysis, you'll not only be able to find opportunities for the trade you entered, you'll find opportunities to stack orders, you'll find opportunities for new trades as well. You don't need to go through multiple different pairs to find opportunities. One single pair, if done right and analyzed right, can give you multiple opportunities throughout the day as well as throughout the week. All right, so I hope you guys see the power of multiple time frame analysis. Notice I didn't have to go through different pairs. I focused on one pair and found a myriad of moves all within a specific time frame. Could have made all this money within a week. So if you know how to do this effectively, breaking things down and going back and forth between time frames, then you're gonna see significant improvements in your trading. All right, so I hope you guys gained value in this video. If you did so, please like, share, and subscribe. And until next time, Jordan the Maestro, peace.